earnings season now, but you know what that means? That means more retailers still to come. And it is a busy week for retail, but we're also getting a couple of key tech names thrown in there. This week, we're going to see some really hot charts. What are they? I brought 5 of the hottest charts you should be watching. Let's see what they are. So the first one is one we all know, but maybe we don't love if we're not owning it, is Intuit. Yes, they are the owners of TurboTax, QuickBooks, Credit Karma, and Mint. And look at this chart. Wow, it's a beauty. Hasn't missed for 5 years. So let's just start there. Great earnings surprise track record, and shares now at the 5-year highs. Now, they're not cheap by any means, trading at 51 times. So you have to be asking yourself, how much are you willing to pay for these earnings? But so far, the street is willing to pay the heavy, high valuation for Intuit. Now let's switch over to the other tech side on the semiconductors, Nvidia. They've got a great earnings surprise track record too, but they do have that one miss there in 2018, right down here. We all remember that one because the shares did take a dive. It turns out that was a buying opportunity, one among many that have happened in the last couple of years. These shares have finally broken out of this 6-month treading water area, but still kind of struggling to remain above it. Now, they have announced that they're going to split the stock. Will that give it any more further upward momentum? Maybe, because those of us who don't want to pay $600 a share now can get it, at least, the number of shares much cheaper. But what is the valuation going on with Nvidia? Every time I talk about it every quarter, it seems like it's really pricey, but it's now trading at 44 times, which is actually down from where it used to trade the last couple of quarters. So maybe all that treading water has done its job, and it has made it more attractive on a valuation basis. But we're going to see what's going on with them this quarter, and this is one of the big ones to watch. Then sticking on tech, we're going to switch over to Salesforce.com, and you can see they too have a great earnings surprise track record. Going back to our data there in 2017, they haven't missed in the last couple of years either. Now, these shares are off the 2020 highs, but they got really hot to handle on a valuation basis. And they're still trading, even with this pullback, at 64 times. So this one is among the more expensive of these hot names. And there's already some expensive ones like Intuit in this group, but Salesforce still, pretty pricey here, as I said, at the 64 times. But this is one definitely everybody's going to be tuning into. Then staying on the tech is Dell. Dell is resurgent here after they went public again just a couple of years ago. So they are up 34% year to date here, trying to bust out and looking like they're succeeding here. And this is one of the few tech companies where the shares are actually cheap, trading at only 12 times forward earnings. And those earnings have been on the increase because we've all been staying home. And what are we buying? We're buying laptops. We're buying them for our work. We're buying them for the kids so they can go to school. We're buying. Everybody's buying. So how long will that continue to go now that we've got our new laptops? Might be a while before we have to buy more. But this is one to watch on that hardware side. And with this hot chart, definitely one to tune in on. Then we're going to finally turn to retail here among the hottest charts with Hibbett Sports, ticker HIBB. All the sporting goods retailers have been red hot during the pandemic, huge pandemic winners. But that's kind of continuing here into 2021 because apparently we're still going to buy that tent. We're still going to go out there on the camping, the hunting, the running, everything, even though the gyms and things are starting to reopen. Maybe some of our habits have changed with what we're doing in the outdoors, and we're really embracing it. But Hibbett Sports up 66% already year to date, as you can see, just off the 5-year high. But shares are still cheap because those earnings are soaring too, trading at just 15 times. So this is one that has value, but The street is going to be asking how much more can it really have? How much more are the consumers willing to buy these outdoor goods? I think might surprise some people, but we're going to find out a lot this quarter. So you definitely want to tune in to Hibbett and any of the other sporting goods companies. So these are a lot of hot charts that are going to be happening this week. So it's not over yet. I'm still going to be covering everything going on with the retailers and these like stragglers and some of those who are reporting on the fiscal quarterly reports. Couple of hot ones in there, including Micron. So you want to be sure to subscribe and get all of our videos. You can get them all on YouTube. You can get there at Zacks.com/YouTube, or just find us on YouTube at Zacks Investment Research. But either way, be sure to subscribe, and I'll see you again next time with some more charts.